All right, checkmate crew. Good afternoon. It is August 18th, Thursday, right afternoon here in New York City. And as always, we're here with high noon highlights. Let's talk about what's going on. So yesterday we had the FOMC minutes. I had a lot of questions in my DMs regarding this. Even on Discord too, people were asking, hey, what's the message? What's really between the lines? If you read between the lines, what's the real message here? Okay. The media, what all the media does is really they just sell sensational news. Okay, they have to get you to click on their news articles, right? So CNBC, Bloomberg, all the major news outlets said that FOMC minutes, looked hawkish, and that the Fed was actually taking a more hawkish stand with their in their FOMC minutes. Oh, they're more likely to raise rates, because of labor and all of this. And that's what a lot of the news media was focused on. I actually read it myself, and I'll give you my analysis of it. And as usual, I think the media missed out on the big points here. Okay, so the big point is this. One, I think actually, as nebulous as it may sound, Powell and crew are calling the policy rate at the current policy rate right now. They're calling it in the neighborhood of neutral. They actually used that word in the FOMC minutes. Okay, they actually used the words that the rate was in the neighborhood of neutral. Okay. They also mentioned that they're well aware of the risks of over tightening. That doesn't sound so hawkish to me. Okay, so they're worried about over tightening, and they're talking about the rate being neutral right now. And as you can see, the real reaction, when the FOMC minutes come out, it comes out at 2 p.m. Pacific time, guys, right? All right. Where is the rest of the world? Okay, Asia is already asleep. It's like early morning, past midnight. It's like the wee hours of the morning in Asia. All right. In Europe, it's like supper time in Europe. You really think all these institutional desks are, sitting there? These institutional traders are just sitting there looking at this and waiting for these FOMC minutes? No, they're not doing that. What are they doing? They're at home, and they're, when they get back to the office in the morning, that's when they go over it and then make their plans for the day. So as you can see here, we're seeing a little bit of a bounce in the market, okay, because of this talk of again, it's from the FOMC minutes. It didn't sound very hawkish to me, despite what the media said. It actually sounded pretty dovish. Again, calling this the neutral rate. I don't know about that. I don't know if this is neutral rate. And actually, this morning we actually saw, I think, the Fed reacting to the news reaction. Okay, today, if you look at some of the comments that were made by some of the Fed governors, especially I think Daly, he got on and he said that that the basically the labor markets are strong enough to take on more hikes, and so I think Daly was more reacting to the news reaction. Okay, the news reaction was a little bit. It sounded hawkish, and so I think Daly just got on. I believe it was CNN, and he just said that basically they're going to keep raising rates, but he was trying to alleviate some of this fear about a recession. Okay, I don't think that this is neutral. Okay, I still think they're being a little bit slow on this. but again, it's not our opinions really don't matter in all of this. It's really about what the bond market prices in. And if you look at the bond market right now, yesterday, you remember how we looked at it? It was around 50-50. Right now, the bond market is leaning toward that 50 basis point hike again, okay? Remember, it was like 60-40, and then it was like 49-51. It was basically like 50-50, and now we're back to 60-40 again. As you can see here from my screen, or 65-35 now for a 50 basis point hike coming up in September. Okay, so markets are reacting to this, and again, just my analysis of this as well too. It just sounds like the minutes were a little bit dovish. It just, in my opinion, just reading between the lines. Again, it's that the calling it neutral. I think that's pretty dovish. So we'll see. We'll see what happens. We also had. I also went over the retail sales number for July. It was flat. The consensus was that retail sales would come in at 0.2% gain, but that doesn't seem like that was the case. It actually looks like if we take out gasoline stations and autos, that month over month, it does look like it was an increase of 0.7%. But, gasoline stations spending came down about 1.8% month over month. Autos also came down at 1.6%. If you take those two out, it becomes a gain of 0.7. So it looks like the consumer is still very, very strong. Online shopping actually went up by 2.7% month over month, probably from the Amazon Prime discounts. This was one of the bigger discount days for Amazon Prime, bigger discounts than usual. So we saw consumers coming out and increasing their spending online. So the consumer is strong. All right, labor markets are strong. I think if the CPI report comes out higher than expected for the next CPI and the next two CPIs, I think that gives the Fed a good opportunity to raise rates even more. I think one of the Fed governors said that that the market is getting ahead of itself on the Fed pivot, and I think that is true. Okay, but again, it's not really about our opinion. It's about what the market does. Okay, if the market prices in a more dovish Fed, we're going to see risk assets going up, and that's just the way it is. Okay. Financial conditions are loosening, okay? They are getting looser. That is probably not what the Fed wants to see. If you look at the Goldman Sachs Financial Conditions Index, and they take into consideration, I think, a lot of currency moves, interest rates, and also commodities data, it does look like the conditions are loosening. And we see it ourselves with our junk bonds AD line. We've seen junk bonds go up. Generally, when there's a bid on junk bonds, that just means that liquidity conditions are improving. The dollar has eased from its highs, although the dollar is coming back up again in the last few sessions. Now it's over its 18-day moving average. It went over that 3 or 4 sessions ago, and it's still continuing up. I do think that the Fed will probably look to tighten those conditions. We will see. But as far as asset prices and currency prices are concerned, it does look like financial conditions are loosening. So probably that's not what the Fed wants to see. I wouldn't doubt next week during the Jackson Hole Symposium, where all the central bank bankers are meeting. I wouldn't be surprised if they come out with some type of hawkish message. Okay, especially if we still keep going up in the markets like this into next week. All right. One thing that I do want to point out, I think this is very important, is HYG, which is Junk Bonds ETF. This, you really don't want to see this closing above, let's say, 77.90 or so. We really don't want to see, oh, well, if you're holding puts, if you're bearish in risk assets. If you're bearish on risk assets, you do not want to see HYG closing over 77.90, okay? You do not want to see it. We're very close, all right? We took on some lottos yesterday, and most likely they're going to go to zero. But yes, this is why you keep lottos small, okay? And this is why I hate lottos. And I don't know why I'm playing lottos. Yesterday, I saw some people doing lottos, and I guess I wanted a taste of that, but lottos never go well for me. But anyway, 77.90, that's the level. So we're right there. We're only like 4 cents away from that level. If it goes up, then this could be just a false breakdown. Usually false moves come fast moves. Hopefully not, because I'm still holding my puts, but we shall see. Okay, we'll see. As far as all the indices are concerned, although it is a positive day, I just see this as a little bit of a retracement. I did expect this to fall a little bit faster, but with this low volume and it being August tends to be a month like this. It tends to be a very calm month, just because a lot of traders are. A lot of institutional traders, especially in Europe, are still on vacation. And they don't really come back until after Labor Day. After Labor Day weekend is usually when we start seeing volumes come back into the market, and we see more prolonged movements in the market. So I wouldn't doubt if we just chop around here for a bit. And again, I warned you guys about this even a couple days ago. I said that the NASDAQ, especially when it is not a risk event, barring outside of a huge risk event or like a world happening, some type of event like that, a black swan event, generally markets do not do this upside down V down movement. Okay, usually, like for example here, for you guys that have been with me for a while from the past Discord, that I was calling for a market top around November, December. I was talking about how 2022 was going to be a difficult year and how NASDAQ was going to be an underperformer while inflation goes up. And I was already making parallels to the 70s right here in November, December. And a lot of that came from our TIP TLT chart, as well as the data that we look at. But anyway, even though the data was turning around November or so, it took about 6 weeks for really the prolonged selling to take effect. Okay, as you can see here, it made a top in November, and it kind of went back up there, kind of tried to revisit it. It tried to do that 2 or 3 times, and then it went down. Same thing right here in April, in late March and April. We had a bear market rally. All right, it went above where we saw hedging demand. All right, it overshot it. It went down, but then it came back and revisited, retested it, and then came down. Okay, it rarely, if it's not a black swan event, if it's quantitative or options market induced a sell-off, usually it takes some time. Okay, there usually is like a retest. It usually comes back just like this, just like here, just like here. This was a little bit longer. So I do think that we're going to see that. I wouldn't be surprised if we just kind of like maybe just, do a shallow dip, maybe even come back up and revisit this level around, Labor Day or just right after the Labor Day weekend. And then maybe we see the big move happen after that, either big move up or big move down. Who knows, right? I mean, either way, it could go either way. Again, I'm not trying to predict the future. I'm just trying to anticipate what could happen and just getting myself prepared for what could happen. All right. So again, this could curve up and revisit this and then make the bigger move. So that's why I always like to do longer dated put spreads. That way I can hold on to it just in case, because you have to account for that randomness. Markets are a series of random events. All right. So, it could, on the daily chart especially, it can do some type of random formations and then make the bigger move that's based on the data. Okay, so keep that in mind, guys. All right, this might be a slower move than usual. All right, although the dollar is quickly tightening conditions. Look at that. Booyah, look at that. And a lot of that is actually coming from the emerging market side. The CEW generally throughout the day has very low volume. Usually lots of the volume mostly happens at the end of the day, where the orders match some of the bid and asks. But if you actually compare some of the emerging market currency pairs to the dollar, a lot of them are down compared to the dollar. I think, I think it's the common theme here. I've been saying this for a couple of days now. A lot of emerging market central banks are dashed for dollars right now. They're just trying to gobble up as many dollars as possible. We've been talking about this for weeks, where the tightening and the dollar going up is putting cost pressures on emerging markets, not only in their commodity prices, and because when most commodities are priced in dollars, so when the dollar goes up, even if commodity prices stay the same, which they haven't, they've mostly gone up for the year. Even if they were to stay the same, the cost goes up as the dollar price goes up. Also, too, most debt is denominated in dollars. So when the dollar price goes up, it becomes more expensive to service that debt. So as you can see, emerging markets, I think, are trying to get as many dollars in their position as possible, because they're probably already feeling that crunch, and they probably don't want it to get worse. The pain could be a lot worse if the dollar goes up, and so that's actually fueling the dollar going up. The fear of the dollar going up is actually fueling the dollar going up. So we're already starting to see that coming from emerging markets. I still think in 2023 at some point, maybe second half, we're going to see that. It's going to show up in the media at that point, probably in the second half. But I think the cracks are already starting to form. So at some point, I may be venturing back into the EEM put positions that I had, that I got stopped out of around here. I got stopped out of it around here or so, around July, when the Australian dollar went up. So let's see. I do think that we're probably going to drop one more time this year, and then we're going to start a mini bull rally. And when the mini bull rally happens, I suspect that EEM will go up too, and that's probably when I'll start accumulating really long-term puts on EEM. And we'll see. And hopefully the implied volatility will still stay down, so that the leap puts can still be cheap. We'll see. That's a potential play down the road, months down the road. Okay, not yet. That's like months down the road, okay? But I'm just trying to anticipate 5 or 6 moves ahead at this point. So that's the dollar, all right? Euro. Euro is a risk-on currency right now. Not doing well, of course. It is breaking down. This is headwinds for European stocks quantitatively. Okay, so when the euro is going down, that just means that perhaps the export demand or the industrial output of a country like Germany, probably the currency market is seeing that their output may go down, with commodity prices heading where they're heading. But based on the numbers, if you look at actually the gas stockpiles that Germany has, Germany's about 2 weeks ahead, and their gas storage, their natural gas storage, they need about 90% storage capacity in order to go through the winter without having to do rationing, okay? And they're 2 weeks ahead of schedule right now. So I'm not sure where this fear is coming from. I do know this, that some of the ECB members, the European Central Bank members, they did get on TV, and they did say that the inflation numbers are not improving over there in Europe, and that basically they're sounding very hawkish. Okay, so with that hawkishness, I actually thought the euro would go up, but it's not. Maybe currency traders are calling the ECB's bluff. Lagarde is the head of the ECB. She is known to be a dove, but even she is starting to sound a little hawkish. And again, I don't know why, but the euro is going down. Maybe the anticipation is that the US may be even more hawkish than the ECB. Now that would be a surprise that the market is not seeing. I don't think the market has priced that in yet. I think the market is pricing in gradually pricing in a more hawkish Fed, but we'll see. I do know that if you look at the FOMC, let's see here. Let's go to that real quick. If you look at this, we are looking for peak Fed funds rate at 375, and I think the pricing of a rate cut is actually diminishing. So see that the rate cut, the pricing in of a rate cut in 2023 is going down. So it looks like right now so far the most likely scenario that the market is pricing in based on the Fed funds futures is that we're going to 350, 375 on the Fed funds target by end of the year, and we're going to stay there until the summer. That's what it looks like. Okay. So remember about a week or two ago, they were pricing in a rate cut around June or July, but that doesn't seem like the case now. It seems like as if they're just going to maintain and hold. All right. That seems to be another thing that I hear a lot on the media. Oh, they're going to maintain and hold. I think a lot of the governors are saying that. Oh, we're going to raise and hold. We're going to raise and hold. So I think the market is taking its, pricing that in now. We'll see. At least the dovishness is getting priced out in the future. However, for this meeting, this coming up September meeting, the chances of a 75 basis point rate hike are diminishing. All right. Although this can change quickly, we've seen this change like intraday sometimes, right? We've seen this change like within like 12-hour period. So, right now the bond market seems to be a little bit fickle. So we'll see what happens. Okay. Let's take a look at some of our other data as well. So that's the bond market. Commodities. I mean, guys, if you want to see an inflation indicator right here, we've been looking at this. TIP TLT is still above its breakout zone. It's still kind of nested there. If you compare it to DBC is up. Now, look at DBC. If you just look at a closing basis, which is what a line chart is, the line chart only takes closing prices into consideration, whereas the candle, you get to see the open, the high, the low. The line chart gets rid of all that noise and just gives you the closing prices. And if you look at DBC closing prices, guess what it did? All right, right here. What is that actually? What is that low? That's 24.89, 24.87. So it just made a higher high and a higher low. A higher high back in around August 11th, and a higher low on August the 16th. And now it's been going up. Okay, do we make another higher high? Ooh, if that happens, definitely I could see a TIP TLT going up. All right, so that's something to look at. I know some of you guys have been bearish on oil. I think, and again, this is just from what I see from the order flow. It does look like gasoline made a low for at least for the next couple of months until October, November or so. October, November is usually when when refineries slow down their production to get ready for the winter blend. So maybe we might see market conditions change, but gasoline, I think, made its low until October, November. I think this is the low. I think it's going to go up until October, November. Right now, gasoline made a higher low a couple days ago on the 16th, right when DBC made its made its higher low. Okay, gasoline made a higher low. It's starting to come up. Will it make a higher high? That would definitely, I think, I think that could be the impetus for a lot of commodities and grains as well too, food commodities to also go up in price as well. That could also be the impetus for crude to go up. If you look at the crude chart, it's not the same. It didn't make that higher low. However, however, I do think that this if gasoline does make a higher high, I think we could see a higher high in crude as the crack spread widens. When the crack spread widens like that, when the margins on making gasoline become that much greater, refineries will start buying more crude. They'll start buying more crude contracts. Okay. So I think that's the tell. So we have to look for gasoline. Gasoline makes that higher high. I think oil also goes up too. It may be a decent long play on oil. And then if it gets to 120, I'll short it. So now we have potential two-sided trading on oil. So if I see that higher high on gasoline and then we see a pullback to the higher low again, and then crude oil makes also dips on that, I will buy crude oil, maybe some call spreads, maybe a call spreads on USO, which is the ETF, or perhaps just directly on the oil futures contract. But I'll do a call spread on oil, and then when it gets to around 113, 114 or so, I'll take profits on that, and then I'll short oil at 118 to 120, buy some put spreads on USO or on oil contracts. So I'm going to add that to the plan. Okay, but that plan is based on gasoline. All right, I need gasoline to make a higher high and then make a dip to make another higher low, and that is when I'll scale into some crude oil long call vertical debits. Okay, I'm not comfortable yet going straight out into crude oil contracts. Whenever you take a futures contract position, that is an undefined risk position, meaning that you could lose. It's not like a defined amount that you can lose. Whereas a vertical call spread or a vertical put spread, it is defined risk. There is a maximum loss that you could take. Whereas with futures, no, it's an undefined risk. So I'm not comfortable taking that leveraged undefined risk. I'd rather just get into some call vertical debits on the long side, and on the short side take put vertical debits. All right. So that is going to be added to the plan. Corn. Actually, well, since we're talking about energy, let's also look at natural gas. Oh my God, natural gas. Henry Hub. It pulled back a little bit. Right before I looked, it was actually up. So it's pulling back. Interesting. This seems to be a supply area, huh? Interesting. We'll see. I know a lot of people, especially farmers, are looking at the weather reports. They're looking for this milder, or the weather becoming milder. The heat. I mean, the heat is just been crazy. It's been record heat, and so that's a basis that has formed the basis for our PPC thesis, which is our meat market thesis. But I mean, if the heat continues, if we still see record heat going into next week and the week after, I can definitely see this curving up. So this curving up, gasoline goes up, crude goes up. If the soft commodities go with it, I mean, DBC is going to go on a rampage, okay? And I think that's going to bring up TIP, TLT, and that is not good for the NASDAQ. When TIP, TLT goes up, the interest rate sensitive parts of the market do worse. And QQQ is the most interest rate sensitive portion of the U.S. equities market. Okay, so that's natural gas. I don't have a position on natural gas. I usually don't play natural gas. I used to trade natural gas in my younger days. I don't have the appetite for that type of risk anymore. They do call this the widowmaker for a reason. Okay, so ZC, let's look at corn futures. Corn, giving up some of its gains. Earlier it was up today too. Corn made a higher low, higher high. Is this the higher low? Could be. Maybe this is the higher low and it curls up again. If it does, if it breaks out of this, I mean, we could see corn go up. And so I promised you guys that I would try to find that report that downgraded the quality of corn. I'll try to find that. But if I recall correctly, about a week or two ago, here in the United States, a lot of the corn got downgraded in quality because of the heat. It's causing corn crops to not be as good. Remember, when we called the top on corn, I said that we're probably not going to revisit these levels this year unless we have some weather-related, freak weather-related happenings like record heat. Well, lo and behold, look at this. Now we're having this heat wave. Maybe it does come back up here. We shall see. If this goes up like this, again, DBC has every reason to go up if that is the case, okay? Wheat, not as strong as corn, all right? I think wheat, a lot of this is news-driven because of the Russia-Ukraine conflict. There is a shipment of grain that's making its way out of Ukraine. I think that's caused prices to come down a bit. But, prices have gone up a lot in anticipation of this conflict. So, I'm not surprised that it is coming down and cooling off a bit. Soy kind of like, ooh, what happened? Soy is kind of like corn. There is some weather-related damages. We will see. It's not as, the chart is not as strong. It is a higher low, but it couldn't make a higher high. Okay, it couldn't make a higher high. So we'll see. We'll see what happens. Maybe. Yeah, it looks like it's coiling up. Maybe it breaks up. Maybe it breaks down. We'll see. We'll see what happens. Okay, we'll see what happens. Feeder cattle. Let's look at livestock. Still, on a rampage. Still going up. Still going up. How's Tyson doing? Oh man, congrats on those. Oh wow, I know Wonderbug. I don't know if you're gonna listen in on this later on, but congratulations on taking that. You were way braver than I was, and you took this trade, and you are up. That's good. That's really positive right here. It looks like it's. I still think there's a chance that it may go down a little bit more though. That's the only reason why I didn't take it, because I do think that we're gonna have one more bout of episode of volatility in the markets before we have that mini bull market. But I still think there's a good chance that this may go down. We'll see. We'll see. Okay. That is TSN, PPC coming down. I'm still waiting for that high 28s, low 29s, where the two standard deviation Bollinger Band is. Yeah, right now it's at 28.78. So once it hits there and hits it a few times, that's when I'm going to start scaling in. That seems to be where demand comes back for this stock. All right. So that's PPC. All right. So that's commodities. Anything else that I'm looking at? Let's see. We always look at these spreads. Nothing really has changed. It's just bouncing up. We're not seeing this breaking up. We're not seeing the stagflation signal going away. 10 and 2, it's still very much inverted. This is headwinds for bank stocks. Although bank stocks have been rallying for the past couple of weeks, we'll see what happens there. High-low line. This is our high-low right here. Well, our high-low yesterday, it's still going up. Actually, it's still positive for a high-low, although it is slowing down its ascent. It is slowing down. It's starting to curve. I don't know if it's going to curve back down or not. But if it does, then it probably is a signal that the bear market is going to continue. If this keeps going up as the market keeps going down, that is a huge setup for our mother of all buy the dips. That's a huge setup for the Moab. Okay, so we'll see what happens. I think this is like weeks away from giving us a clear signal, either on the continuation of the bear market or the setup for the Moab. It's still weeks away. Okay, so this is a slower moving indicator. It is forward looking, but it moves somewhat slower. Okay, so keep that in mind, guys. Okay, let's look at cryptos now, as we always do. Let's take a look. Cryptos. Ethereum. What is going on with Ethereum? Ethereum nominal options value was up, actually. Notional OI. I noticed that it was around $8 billion, if I remember correctly. Yeah, so 7.9, it was at 8. So yeah, it's just fluctuating there. We are seeing a lot more interest in the closer dated options expirations, most likely from retail traders, as retail traders get they get more excited about these kinds of trades. We are seeing, although we are seeing more participation in puts this time around, but that's been a common theme in Ethereum. As as regular screen trades increase, we see increased volumes in puts, whereas when we see more block trades, we see more calls being bought. So that is a funny dynamic in Ethereum right now. And I think that's just continuing. I'm not really seeing any type of behavioral change, though, in the ETH market. It still seems like more of the same. Let's see, August 26th. So they're looking at the monthlies. So people are buying up monthlies, the 1,600 puts. I forgot. They don't save. Okay. Yeah, so the 1,600 puts, it looks like there's some participation here. 1,650, 1,600. Yeah, these were the higher volume strikes for the day. So yeah, it seems as if I highly doubt these are sells. These are probably buys. Let's see. Yeah, most likely they're buys. They don't show up on the block trades. However, I did notice some block trades today. Somebody is still doing butterflies. They're doing butterflies now on December, centered around the 3,000 strike, 2,800, 3,000, and the 3,200. It's not as big as what we saw earlier, where we saw, I remember, guys, when we saw right here, 3,200, that matches up timestamps with this one and this one. So that's a butterfly. So remember how last week or the week before we saw millions of dollars go into that butterfly trade in March? I don't know if this is the same entity or not. It is a much smaller trade this time, but it's still hundreds of thousands in the 6-figure range. It was more like 7-figure range 2 weeks ago. Every couple of hours, 7 figures, multi-million dollars will go into that trade. We're not seeing that kind of a size, but we are seeing that type of trade, like with the butterfly. I don't know if somebody's just imitating, somebody smaller just imitating that trade and just doing shorter dated. Not sure, but we are seeing that. Somebody also sold some in-the-money calls too for September. Okay, somebody's selling the in-the-money calls. Look at this, 6,000 in-the-money calls, $3 million of in-the-money calls sold. That looks like profit taking to me. Somebody held this and sold this. I can't see an institution selling in the money calls like that, with that much risk. I'm not sure. I'm not sure, actually. Maybe it's a super bearish bet. Maybe they sold to open. I doubt it, though. I think this was sold profit taking. Somebody took some profit, I think. I could be wrong. But anyway, whatever it is, somebody sold some very high delta calls for this very recently, okay? Netted about, between the two trades right here, it's about $4.6 million. So $4.6 million of premium, okay? So that's what I see so far. I don't see any real big changes in the Ethereum options market. I think a lot of it has to do with what the Fed is going to do. I think a lot of it is just the Fed's reaction. If we see the inflation trade come back, definitely expect ETH to come down. Okay, if the inflation trade comes back, the definition of an asset will get much more strict, and we're going to start seeing all the growth assets getting dumped. I don't see how ETH can escape that if that happens. Okay, if the inflation trade comes back, which I think is a good chance it will. As long as HYG, oops, did I just turn something on accident? Yeah. Let's see what HYG is doing. Coming back down. Good. Okay, so that's good for volatility and risk off. But really, TIP, TLT, this staying up and DBC going up, that could introduce the inflation trade coming back. If the inflation trade comes back, HYG will come down, dollar will go up, ZF will go down. I mean, it's just there will be a whole chain of events that happen, causing a risk-off sentiment. All right. So speaking of which, as we always do, as is tradition, at the end of high noon highlights, I like to go over our current positions, our current indicators that we're looking at, and the current trade plan. Okay. So indicators, HYG. 77.90 key level for the day. If we are bearish on risk assets, we want to see HYG continually close under 77.90 and then close lower. As time progresses. Okay, we want this coming down. All right. TIP TLT, very important to watch. This plus all the commodities. DBC is the ETF for broad commodities. I'm keeping a very close eye on this. If this starts curling up with DBC making a new higher high, that could be the start of the next wave of the inflation trade again. All right, so keep an eye on that. The dollar, if you're trading any risk asset, anything, okay, you have to look at the dollar. All right. The dollar still above its 18-day moving average. All right, still going up. Now it's at the 2 standard deviation Bollinger Band. Do we cool off a bit, or is this going to ride the Bollinger Band up? Riding the Bollinger Band up would be a huge risk-off signal for dollar. Okay, that would be a huge risk-off signal for risk assets. Okay, EURUSD still coming down. Not a good sign for Eurozone stocks. We'll see what happens to the DAX after this. AUDUSD, another good indicator. This is a good indicator for China. We are seeing this coming down. So I do know that right now China has made a 3-month high in their COVID cases. So maybe this is what this is about. Also, too, there are certain areas in China where the government has ordered the shutdown of certain factories because of the energy demand, because of the heat that they're experiencing as well. That was announced on Sunday, and we saw huge selling in Australian dollar after that news. So maybe some bad news, or maybe some bad industrial output is being priced in now in China. We'll see if that affects the Chinese index. China FXI is down 1.5% for the day. So these currencies are very good indicators. So I am keeping a very close eye on these currency indicators. We've been keeping a close eye on them, but I think we must remain diligent in monitoring this. Okay. All right. So the next thing, high low. All right. The high low are we going to start seeing this curl down? If we do, we can expect this to come down again at the New York high-low line cumulative. If this curls back down and all the moving averages start curling back down again, that just means we're continuing the bear market. All right. If prices fall, but the New York high-low line keeps going up and all the moving averages keep going up, and this high-low cumulative line gets over its 20-day moving average and all the moving averages start pointing upward, that would be a setup for our mother of all buy the dips. Again, those one or the other, that signal is like weeks away in my opinion. Okay, so still monitor this, but again, it's a slower moving indicator. So keep that in mind. It's not going to give us a signal like day to day, okay? But that is out there. If you look at the advanced decline line, though, is coming down. Speaking of advanced decline lines, our advanced decline line on corporate bonds made a huge dip. And if HYG continues down, this will come down too. Okay, that would pose a divergence. There is already a divergence where the market is above its June 2nd high, but in junk bonds, the advanced decline line, it's actually a lower high. All right, and if the market ends up today and the advanced decline line ends down, not only is there a 3-month divergence, there also will be a short-term divergence as well. So that's 2 divergences. That just makes our thesis even stronger for one more sell-off before the mini bull market takes over, if we even see a mini bull market, that is. But I do think that we will have a mini bull market later on, but after one more wave of volatility. And I think if this continues down, but the market goes up, that gives us that short-term divergence as well as that mid-term divergence in the 3-month. So that just supports our thesis even more. So I will be posting that later on today. All right. What else are we looking at? We already looked at all the currencies. Let's look at the plan. Okay. Bitcoin, Ethereum. Need I say more? We're same plan. Ethereum 1200, or when it gets to that Ethereum gold ratio of 0.6, I think both of them are going to coincide with each other. But we are still waiting on that. It's still kind of in no man's land. What else? We're adding crude oil to the plan, guys. Okay, remember what I said? What we want to see is gasoline. Okay, we want to see gasoline. I want to see gasoline make that higher high. If it makes a higher high and then pulls back a little bit and makes another higher low, and on that higher low, also crude oil pairs back a little bit, that is when I will scale into some vertical call spreads in crude oil or USO. I'll buy some call spreads, vertical call spreads. I'll take profit when oil gets to around this level right here, this 114, 115 zone. And then when it gets to 118, 120, I'm going to buy put spreads on the way down. Okay, so we're going to see, I'm going to do 2 ways trading on this. All right, we have a level for when we want to buy calls. We got a level for when we want to buy puts. All right, so crude oil back into play. All right, but again, it's going to be based on what gasoline does. Okay, so there's that. What else? HUT, part of our cryptocurrency plan. HUT is coming down. If it gets to 165, I'll buy some more shares. Ford, same thing, coming back down a little bit, although not much. If it gets to 1380, at this point, I don't even know if it's going to get down there, but if it does, I'll definitely scale into some shares. Nothing has changed on that. PPC, same thing. I already went over this earlier today, but if it gets to this 2 standard deviation Bollinger Band, which is around 2870 right now, I'll start scaling in to some PPC stocks as well too. Tesla, I had this part of our plan. If it gets to that red line right here, I will buy some puts on Tesla if it gets there. Okay, that hasn't changed too. SPY, same plan here. We either the mother of all buy the dip signal and I start buying shares, or it gets to 360, it revisits the lows. I will start scaling in very slowly with some shares there too. If it gets to that 342, 343 zone, I'll start getting more aggressive in buying long-term shares, and under 340, I'm gonna buy those in the money 1-year call leaps on SPY. Okay. So that's the plan. That's the indicators that I'm looking at, and that is that. Oh, my my positions. My positions haven't changed, guys. My current positions. UVXY, I'm still in those call spreads. December, same thing. What else? QQQ, I'm still in them. I haven't done anything, guys. I haven't done any selling of anything. I've just held. Okay, So nothing has changed. My positions. QQQ, I'm still in my put spreads. IWM, I'm still in my put spreads for October and November. Same strikes, 180, 170. You know, you can go back in the previous videos and see what my current positions are. Literally, nothing has changed. FEZ, I'm still in those two. The Eurozone, right here, still in that spread. EWT, I'm still in that spread. Still the same spread for December. Dow Jones, same thing. Okay, nothing has changed. Oh, I took on a lotto yesterday. I took on an HYG lotto, which I still have, which is probably going to zero. I'm probably going to go to zero, but who knows, right? Who knows? We'll see. We'll see what happens. Okay. So no changes except for that lotto. All right. So there you go. Indicators, current positions, and trade plan. Boom. Checkmate trading. Any questions, comments, rude remarks? Oh, I see people. Oh, none of you took calls on HYG. Good for you. Are you up? I mean, even calls are down, so it looks like the market maker just made theta off of us and IV crush off of us. In the end, I guess Iron Condors won for HYG. So I guess we both lost, Nunya. Okay. Can I speak to the low volume? Yeah, you know, I already mentioned that earlier today. August tends to be a very, very slow month. It tends to be a very calm, low volume month just because a lot of institutional traders are on vacation, especially in Europe. August is like a vacation month in Europe. I usually notice I used to have some colleagues in the institutional desks in Europe, and they would always take the full month off. All right, and about a third of the S&P 500 index trades are denominated in euros. So that just kind of tells you, you know, if they're on vacation, a big portion of that volume just doesn't enter the market. All right. 0.15 to 10. Yours went from 15 cents to 10 cents. That's funny. Yeah, mine went from 10 cents. I think now it's at 6 cents. So yeah, market maker wins. Yeah, being neutral wins. Yeah, generally that's the case. Okay. Any other things you guys want to look at? Anything else? Any other comments, questions, rude remarks? Anything you guys want to look at? All right. Well, that concludes High Noon Highlights for today. All right. If you're joining us on Twitch and YouTube, join our Discord. There's no extra fee to join our. Apparently, it's like a thing where people charge money for Discord access. No, none of that here. We're real traders over here. Collecting a sub fee, that's like poverty money. We don't do that. I make money off of trading, so I don't need that sub money. But there's no paywalls here. So I've been getting actually messages on Twitch asking if there's paywalls on our Discord. No, there isn't. Just come join us. You know, it's all free. We're an open community. We trade ideas with one another. We bounce ideas off of each other, and we try to make all our gains from trading. So there's no sub fees, no paywalls, none of that. So come join us. We have discussions about markets on a 24/7 basis around the clock, so we would love to have you. Anyway, I'll try to be on also tomorrow. I may be on very briefly, maybe in the morning. And as always, I will try to keep our Twitch stream up so that you can try to see the charts and data that I'm looking at. Although in the morning today, early in the morning, we did have an internet outage here in this area. They did, when I called my internet provider, they did say that they're sending a team over and it should be fixed by the weekend. But I noticed that it's already working now. So I'm not sure if this is just temporary or what, but just in case if the Twitch stream is down, it just means that, you know, for some reason there's an outage in my area. So whenever the service gets back online, I'll try to continue that Twitch stream. Anyway, guys, I'll hang around in the Discord for a bit, but if you guys have any questions or anything you guys want to discuss, holler. All right, have a wonderful day, guys.